Hello friends, it's Adam Stein, broker, owner, performance coach here at Century 21 in sunny South Florida. Wanted to share with you the most current market information for residential real estate here in the Miami-Dade, Broward, and Palm Beach County market. We being located in Boca Raton, cover Miami-Dade, Broward, Palm Beach, Martin, and St. Lucie counties. And if you've been getting our emails, watching our videos, checking out our social media, and you've heard me share this information before, you know we like to compare the data month over month. So right now we're going to look at December 21 into January 22, and year over year, January 21 to now January 22. Today's February the 28th, and so we are sharing with you the most recent market data as available, and we look about a month in arrears, so we're looking at January's data now at the end of February. Okay, so what happened in the market in January? Well, we saw an increase of about 3% in the median value of a single family home and townhome and condos, 3% across the board from December to January. Right now, the median single family home in the market, and we really look at the 3-county market for this data, Miami-Dade, Broward, and Palm Beach County, $515,000. That's up annually 18% from where we were in January of 2021. And prior to 2020, that was about a 18% increase. So we've gone up almost 36% in 2 years since 2020 into 2021 and now 2022. Broward County is the lowest of the 3 counties at $500,000, Miami-Dade at $520,000, Palm Beach County's topping out at $526,500 for a single family home. Across the board, townhomes and condos also had a 3% monthly and an 18% annual increase. We're up to about $290,000 for a townhome or condo in the Tri-County market. Here's some other statistics that are very important. We did see an increase in the number of days it's taking to go to contract from December to January. Means that in December, things moved very, very fast into contract. January, things slowed down a little bit, okay? And that's gonna be a very interesting data point to watch to see, are things slowing down? Are properties coming to the market and staying on the market longer? If they are, what that means is that buyer demand is starting to slow down. And what is that gonna mean for sellers? Ultimately means, seller, you're not gonna be off the market in the first weekend necessarily, having received so many multiple offers and then selling your property for way above the listing price. I'm not saying that's happening now, but we'll be watching the data points to see what happens over time. Here's the other thing we saw. We did see an increase in the number of pending sales and the number of new listings in January relative to December of 21. Now that makes total sense. Things do tend to slow down between Thanksgiving and New Year's. So December is typically a little bit lighter in terms of new business. And we always see an uptick in new business in January. That's a very historic seasonal component. So I'm not surprised that we have new deals and new listings, about 4% increase over December into January. Unfortunately, we're still off historically year over year compared to a healthy balance, a healthy supply demand of an appropriate amount of available homes in the market for buyers to purchase. We're still about 11-12% off where we were the year prior and really where we need to be. And so what does all that mean? It means we need more houses so that buyers have more options and so that there's a healthy balance in the marketplace, so that buyers don't get priced out, so that we don't have an artificial inflation where it becomes unsustainable for values to continue to increase at the rate that they are. We also expect interest rates to be on the rise this year. We're not sure exactly when and by how much, but what does it mean for you as a buyer? If there's a 25 to 50% basis point increase in your borrowing interest rate, the cost of your loan, it likely translates into about a $25,000 to $50,000 decrease in how much house you could buy. So if you're considering buying a house, I would say now is the time before rates start popping up, because you're going to be able to afford less house simply because it costs more to borrow the same amount of money. If you're a seller, what it means is that if there are fewer buyers coming into the market, there will be less competition to buy your home, which means that we don't expect values to continue to increase at the same rate of appreciation they have been increasing, which means right now might be the best time for you to sell your house. if that's in fact what you need to do for your family's needs. If you have more questions, you want to talk about the specific value of your home, what it could look like for you to be a buyer in this market, what the financial underwriting of your situation looks like, please reach out to us. You can certainly respond to the email from which you received this video. You can put a comment in our YouTube chat, or call us here at the office, 561-756-9945, Century 21 Stein Posner. And this has been the February 2022 market update. Hope you found this information helpful, and you have a wonderful day. Thank you.